Hello and welcome to the Worldwide Markets Daily Forex Wrap-Up. It is June 11th, 2013. We are actually going to start on the dollar-yen today. Price activity has been pretty crazy. It's pretty much a fight between dollar weakness, Bank of Japan, and some rumors that are swirling around in regards to a very large hedge fund having to unravel some of its carry trade. So as you can see, we have bounced around pretty good from 95.50 all the way up to 99.25, back down to excuse me, current level of 95.80. Basically, right now, as I said, there is a lot of rumors going around that there's a very large hedge fund out there that's unraveling carry trades, which would obviously push this down if they're pushing enough volume into the market. Plus, we've seen a tremendous amount of dollar weakness over concerns for U.S. debt, which has also pushed this down. But at the same time, Bank of Japan is still kind of fighting the other side and trying to push, trying to quote unquote stabilize the yen, and that would push that the other way. So for now, I would definitely be very cautious to trade this. There's a lot of factors and a lot of powers that be at work here. So this could definitely continue to see large swings. And we can take a look at some of the technical levels. Right now, I mean, if we get below the 95.80 level, there's not much there until we see 94.50. It's definitely been a previous point, of old support and old resistance and old support. So that's what I'd be looking at if we kind of get back, below this 95.50 level. If it continues to, bounce back up, which I think eventually it will, you're just going to be looking to buy and hold on a longer term. I think once a lot of this stuff settles, the Bank of Japan will eventually be the biggest influence, and this will eventually, I think, make its way back up. We'll switch over to the euro. As we've mentioned, we've seen a tremendous amount of euro weakness. So we broke through the 32.25 50% retracement level. We pulled back down, then we're back up to where we are now, 32.90. What I would be targeting here is the 33.40, 33.50 level as the next target, especially since the dollar is remaining bearish at this time. So that's kind of where I'm looking for this to go, and then we're gonna, if we hit that level, then we'll see kind of what the market is dictating. Same scenario on the pound dollar. We were talking last week about the 54.10 level as a resistance. It broke right through that and ran to the next level that we had at 56.10, and we're pretty much hovering there now. A lot of speculation is that we will see this pair continue to be bullish, and I would look for 57.50 as your next upward target. You see some previous resistance in here, as well as your 61.8% Fibonacci level. So the speculation is that the dollar is going to continue to be bearish, and the pound and European currencies are going to be bullish. So that's what I'd be looking at for the next upward target, is 57.50, and your previous level of resistance at 56.10. If it gets back below 56, you may want to reevaluate your bullish position. We'll take a quick look at gold. We had a brief period when things were really at their height as far as some of the unrest in Turkey, and gold had a quick bounce to the upside. However, you know, as I've been talking about for the last couple weeks now, I'm still expecting gold to be bearish, and I still want to see it, you know, give back and hit you know, somewhere in the 1200s before it consolidates, and you know, be looking to take longer positions. The previous channel of 1385 to 1400 has also been broken, but you know, as long as it's trading below 1400, I'm still expecting it to make its way down. I mean, it still provides a haven product. You know, it still provides a haven for certain people if there's, you know, global unrest. But at the same time, I don't think that it's anywhere near as strong as it used to be, and I don't think we're going to see a whole lot of long-term growth for the short term. Oil is pretty much, you know, kind of chopping around. We're back at 95.25. You know, as long as these resistance levels remain intact, you know, I wouldn't be looking to take too much upside risk here, simply because we have a lot of resistance at, you know, 97.40, 97.50, 98. You know, so I would definitely, you know, look to maintain bearish bias here unless we break up through 98. That is all the time that we have for today. Thank you very much for tuning in. Good luck with your trading and enjoy your day.